show you the step-by-step process of buying your first multifamily. What are the benefits of small multifamily buildings? How to create your deal flow. Why we are saying we should start from 5-plex, not 4-plex. How do you finance your deal? Today we are going to actually show you the step-by-step process of buying your first multifamily. You don't need to actually buy a big multifamily in order for you to make a good profit. You can buy a small multifamily and make a good profit. We are going to define a small multifamily 5 to 20 units, and we are going to actually tell you the benefit of buying a small multifamily, how to create deal flow, and why start at 5-plex, not 4-plex. And we are going to actually talk about the financing your first deal. Okay, what are the benefits of small multifamily buildings? It's easier to actually wrap up your mind around 10 units than 100 units. And it's actually a very important fact when you want to start buying multifamily. And this is the most benefit that we recommend to our students to actually buy a small multifamily when they're starting buying multifamily rather than like big multifamily. And the other thing is you need less equity. For a small multifamily, you need less equity as a down payment, or if you need to do some renovation, you need less equity. And this less equity means you need less money, and you need just 1 or 2 investors to come and help you with the investment if you didn't have enough money to actually buy that multifamily. And so the equity plays a very important role when you want to buy a multifamily. Creating financing is another advantage of a small multifamily apartment, because in big apartment buildings usually you can't use creating financing because the seller is not a person, is a company, and the company, when you want to go and deal with them and talk to them creatively and try to find a way to use creating financing, is very hard to deal with. So creating financing is another advantage when you're buying a small multifamily. And as we told you before, the single investor is another advantage, because usually in a small multifamily you have just one investor and you don't have 2 or 3 investors, because the equity and the money that you need for the deal is smaller. So you just deal with one person as investor, which would be less headache for you, and it would be a lot easier to deal with one investor than 100 investor or 10 investor. And small family is equal to small mistakes. When you start investing in multifamily, you might make a mistake if you don't have enough experience. And when you start with small multifamily, you have the smaller mistake. And if you make a mistake, you can actually use your net worth to actually start investing in other multifamily. But if you make a mistake in big multifamily, it's not that easy to actually start your business all over again and pay for all the mistake that you have done in previous deal. Less competition is another advantage that you have in a small multifamily, because the number of small multifamily is a lot bigger than like big multifamily. And this is another advantage of a small multifamily. As you go around your city, you see a lot of small apartment building, but the big apartment building, the number of big apartment building compared to a small apartment building is a lot less. So this is another advantage. So you would have more option. You can actually talk to the seller a lot easier because it's small. And the owner of a small multi-family is less sophisticated compared to big multifamily. Usually big multifamily, as I told you, the owner is the LLC or the corporation, or it's not just one person. So it's actually harder to talk to them and actually convince them about the price, about the creative financing, and a lot of other things. But if you deal with small multifamily, It's the owners are less sophisticated, and you don't have a hard time talking to them, convince them about the price and creating financing. And the last thing is, it's easier. The small multifamilies are easier to wholesale. If you buy a small multifamily and at the middle of the way, you actually find out that you don't want to invest in that property. If the price is right and if the seller is just one person, you can wholesale it a lot easier than big multifamily, which would be a headache for you at the middle of the way if you wanted to wholesale it to somebody else. Okay, now we are going to talk about how to create your deal flow. You can have your deal flow from two things, from real estate agents or from direct mail. First, when you want to actually find a real estate agent or talk to real estate agent that they are in 5 or 20 units apartment building, you have to first know how to talk to them and what you're looking for. We are looking for 5 to 20 units to invest that has with the upside, and we should know how to talk to them. So first we go to LoopNet or KGG. If you're in US, you go to LoopNet, or if you're in Canada, you go to KGG, and you try to call the agent. You make a call to the agent and you would tell them that, hi, my name is, let's say, Alex. I'm from a local investor. I'm looking for a small multifamily, 5 to 20 units, which has an upside. If you have anything, please let me know. So after you introduce yourself and talk to the agent, you can get the email of the agent to see if and follow up with the agent. Because usually when the agent has a property or multifamily for sale, usually they call the investor that they have. And if they couldn't sell to the investor, they introduce it to the agent at the office, and then they put it at MLS or anything else. So because usually when the agent get a property, they introduce it to the investor first, to their own investor. And if the investor don't buy that property, they actually go and introduce that to the agent of the same office. And if the agent doesn't have any investor, they put that on MLS. So in that case, usually if the deal goes on MLS, it's not a very good deal. So you need to be in touch with agent in order for you to get the exclusive off-market properties, which you could get a profit out of it. So if the other method to have the deal flow is using the direct mail. What is the direct mail, and why it's actually good for you to find a deal through direct mail? Because when you're finding a deal through direct mail, there is no agent, real estate agent involved. Because usually when there is the owner has a real estate agent, the real estate agent doesn't actually let you to use the creating financing, or they have to protect the owner's right, so they don't actually let you to bring the price down, or because the seller has to pay the commission to the real estate agent, it's not easy to bring the price down. So these are the important points that we're telling you, that you have to use the direct mail and the off-market deals, because it's actually easier to do those stuff, and it's simpler to do the wholesaling. Imagine you want to do the wholesale, it's easier to do it with the direct mail or with the off-market deals than actually going and finding a deal on MLS and try to convince the seller with the agent to use the creating financing or other methods. And you should, when you do a direct mail, you should do it like every month, four times in a row, and you should actually have a fresh list of property owner. Your list should be fresh and new, because usually people call the list that is very old and it's not very useful. So try to get a fresh and new list. Okay, why we are saying we should start from 5-plex, not 4-plex? The 4-unit multifamily is residential property. On residential property, the value actually comes constrained by sales comparison. So when the value constrained by sales comparison, you don't have that much gap that you can increase the price very easily. You can actually do it the same way that you're doing it on commercial property. Imagine on 4-unit property, you increase the rent by $50 by $100 in 2 years. What effect would have on the value of the property? Nothing. But it's exactly the opposite for commercial property. So in 5-unit property, which is a commercial property, the value comes from two things: the sales comparison, the same as residential, and the net operating income. The net operating income has the actually more effective. It has a more effect on the value than sales comparison. So, what is net operating income? If you subtract the income from the expenses, you would get the net operating income. Imagine for 5 units building, you increase the price by $50, and in 2 years, which is in every year you increase $50. So at the end of 2 years, you increase it by $100, and that $100 times 5 is equal to $500. And if you wanted to actually have that annually, 500 times 12 is $6,000 per year, which the new value for that 5-unit building is equal to net operating income divided by cap rate. To be conservative, imagine that cap rate is 8%. So you increase the value, so you increase the NOI by 6,000. So you divide 6,000 by 8%, it's going to be 75,000 increase in value in commercial building by increasing $50 per unit per year. This is very normal in commercial property, and that's why we are saying you have to start with 5 units and more, not 4-plex, not 3-plex, because you can easily increase the price of the commercial property by using the formula and use the forced appreciation. And this is the main reason that we are saying 5 unit and more. Okay, how do you finance your deal? When you want to finance your deal, you have 2 ways. You can either use the conventional loan or you can use the creative way. The conventional loan, if you want to get a conventional loan, you can do 2 things. You can either go to the local bank and talk to them, which they're usually based, the employee over there, they usually work based on salary, and if they actually don't get a loan for you, nothing would happen. So they won't try that hard to actually get your loan approved. So usually what's happening is you go to the local bank, the bank might not approve you, or they might approve you, but usually the chances are not that high for you to get a loan from the bank that easily. Or you can go to the loan broker or mortgage broker, and because they work based on commission, they try their best to get the loan for you, because if they don't get the loan, they don't get the commission. So what they do is they send your document to a lot of lenders and try to get the best term for you and the best loan for you. So that's why I very much recommend for the first couple of deals that you have, try to actually send it to mortgage broker or loan broker to get the best price and get the best interest from them, because they work based on commission, and they're actually they love to help you, that you help them later on as well. You can if instead of getting a conventional loan, you can get the creative way of getting a loan. You can either use the seller financing, or you can do the seller carry-on, or you can do the syndication or wholesaling. For example, imagine you go to buy a multifamily, small multifamily, and it's a paid-off property. The seller doesn't have any mortgage on the property. So you can negotiate with the seller and tell them that, can we use the seller financing for 3 or 5 years? And if the seller agree to do that, and in most of the cases in our deal, we talk to the seller and convince the seller, because if the seller want to get the whole money, he has to pay the tax. He has to pay a big tax amount if they want to actually get the whole money, or they can accept the seller financing and get their money eventually in 5 years, and they, in that case, they don't have to pay that much tax. So you can use seller financing for paid off property, or you can use the seller carry on financing, which in that case, imagine you go to the bank asks for 30 to 40% down payment. In that case, if you don't have the down payment, you can go to the seller and ask for 10-20% seller carry as a second mortgage, and that's very actually normal in commercial or multifamily buildings. Or you can do the syndication and use other money, other people's money, and close the deal, which we actually talk about it in different episode. Or you can do the wholesaling. If you have that commercial property on the contract, you can actually introduce it to somebody else and get the profit out of it and actually reassign it to somebody else. This is another method of using to actually financing or actually buying a commercial property creatively, if you want to actually do that. Thank you very much for your time, and hope to see you in another episode.